Greetings and welcome to our video about credit card debt and how it's robbing you and your family. We're going to show you how they do it and how much they're taking. But first, a little housekeeping. Turn up your speakers to your convenience, and to make this video larger and more readable, there is a circle in the upper right hand corner of the screen with an X in it. Click on that and it will increase the size of the video slides. Alright, let's get to it. As I mentioned in this video, we're going to talk about how credit card debt is robbing you and your family, and this is going to make you very mad. How much of each dollar you earn is left for savings, and this is going to hurt. And your options of becoming debt-free, and this will be an eye-opener. As I mentioned, debt is robbing you of the ability to save money for your retirement, your children's education, a down payment on a home, or just enjoying the fruits of your labor. And we're going to prove it in this video. Alright, if you go to work today and you make $1, as you know, you pay federal taxes, income taxes, Social Security taxes, etc., etc. These are called direct taxes. Taxpayers pay anywhere from 26 to 32 cents of every dollar to pay these taxes, meaning you're going to retain about 2/3 of your income while paying another third in taxes. In this example, we're going to use 30 cents to pay taxes. Next, out of that dollar, you pay more dreaded taxes. These are called sales or excise taxes, which range anywhere from 5 to 8% depending on the state in which you live. We're going to use 5 cents in this example. Next, you're going to pay overhead, what you pay for food, rent, mortgage, transportation, internet, healthcare, cable, and so forth and so on. The national standards say that the average family pays from 28 to 32 cents out of every dollar for overhead. We're going to use 30 cents in this example. Next, if you owe money on credit cards, then you will pay interest on that debt, as you are well aware. But what most people are not aware of and don't know is that if you pay the minimum payment you are billed for each month, it is mathematically designed by the credit card companies to take you more than 30 plus years to pay it off. Let me show you. Here's a credit card statement from one of our clients. In this example, they owe $36,951. Their minimum payment is $784. And if you scroll down to the green circles, and they pay that minimum payment of $784, it's going to take them 42 years to pay it off, and they're going to spend more than $101,000 in additional interest. Think about what that $101,000 could do in your retirement account. That's outrageous. No wonder you can't save money. And Social Security was never designed to be a retirement plan. So use 29 cents of every dollar for credit card interest. Let's add them all up. As you will recall, we had 30 cents in taxes, 5 cents for sales taxes, 30 cents for overhead, and 29 cents for interest for the next 30 to 40 years. That's a total of 94 cents out of every dollar, leaving you 6 measly pennies to save for your retirement, or your children's education, or just enjoying life. At 6 cents of every dollar, you can't save for your retirement. You'll never have enough years left to do that. You've got to get out of debt. You should be mad if you're not. So let's talk about your options. You only have 3 options. One is debt negotiation, which is you typically settle with your creditors for 30 to 50 cents, which is the worst case, as a settlement in full. The downside is that your creditor is legally obligated to send you a 1099 miscellaneous for the difference. This is called debt forgiveness and is a taxable event according to the IRS. Now, footnote on that is if you're insolvent, which means you owe more than you are worth, then you can get out of the debt forgiveness tax. Now, in order to qualify, now you can do a Google search on debt forgiveness and taxes, and it'll explain it more in detail. In order to qualify, in this example, if you owe $20,000, you'd need $6,000 to $10,000 in cash. Be sure that you don't attempt to settle a few and then run out of cash, then have to file bankruptcy. You will have wasted a lot of money that could have gone in your 401k. Option 2 is called consumer credit counseling. In a nutshell, you pay about 2% of the balance owed of your total through a plan developed by Consumer Credit Counseling and your creditors. In our example, you owe $20,000 on credit cards. You're going to pay 2% a month. That's $400 for about 50 months, assuming some of your creditors agrees to freeze all of the interest. Now, some creditors will, some won't. Some will cut it in half. To qualify, in this example, you'd need $400 a month left over after paying all of the necessities of life. In this example, through a consumer credit counseling plan, you're going to pay back 100%, maybe more, of the debt that you owe, as opposed to 33 to 50% using the debt negotiation tactics mentioned in option 1. In some cases, consumer credit counseling won't take you. If you have lawsuits filed against you, they won't accept you. They can't stop foreclosures, wage garnishment, or bank levies. Your credit report is also a red flag to note that you're in a credit repayment program, so getting new credit is going to be very difficult while you're in that 50-month program. Now, if you don't qualify for consumer credit counseling or debt negotiation, your only option that's left is bankruptcy. But which chapter? Now, there are 2 chapters available for consumers, 7 and 13. 7 is called a liquidation bankruptcy, which means all of your unsecured debt is wiped out. You continue to make your house or car payments if you want to keep those items. Those are called secured debts. You are in and out of bankruptcy in approximately 90 to 100 days with one short court appearance. It's not really a court, it's an administrative type hearing in front of the trustee, not in front of the judge. Chapter 13 is a reorganization bankruptcy where you pay your unsecured creditors whatever is left from your paycheck after paying all of your overhead, your house payment, your car payment, etc., through a plan of either 36 to 60 months. Obviously, most people want to be in and out of bankruptcy as soon as possible so you can start rebuilding your credit. You can buy a home within 2 years after filing. It's very easy to get your credit scores above 700 in 6 to 9 months. But you need to qualify first for Chapter 7. On our homepage, click the menu item, Do You Qualify? Answer the 6 yes or no questions, and you will have immediate results. Now, we never assume anyone should file bankruptcy, but we assume everyone should consider all of their options. But when bankruptcy is your best or only option, the question now is, should you hire a lawyer or do it yourself? We also assume that if you can surf the internet, answer some questions about your finances, and follow step-by-step instructions, samples prepared by attorneys, our how-to videos, then you can prepare your own bankruptcy. So, if your debts are keeping you from important things like saving for your kids' education, your retirement, replacing your car, being able to retire on time, or affecting your health, then you should consider bankruptcy. If you're still not sure, enter your name and email address below to get the first set of required forms called the voluntary petition. Review the step-by-step instructions, the attorney-prepared samples, the how-to videos. Then you will know whether you want to proceed on your own. Your choice will be clear, very clear. If you decide to be your own lawyer, you can start to file your personal bankruptcy immediately. You can do this from your own computer in the privacy of your own home and at your convenience with our maps, videos, samples, and guides there to assist you, step by step. And it's only $127, a small price to pay for a peace of mind, becoming debt-free, and starting to save for your retirement or your kids' education. Okay, we hope this informational video has been helpful. We hope that it's been educational as well. We hope it helps you make a decision about your choices. But debt has to go. That's obvious. We hope you agree to that. Thanks for listening. Hope to see you on the inside.